Good morning, small players. Welcome to another episode of Pre-Market Scanning. On the left-hand side, we have the results that our scanners populating based on the stocks that fulfill our criteria. The scanner's set up to auto-populate every second, so we don't have to refresh it or do anything. Anytime a new stock fulfills the criteria, it will pop right on it. Same thing with our market hour scanner. Once the bell rings, any stock that fulfills the momentum criteria, so not the gap or criteria that we look for in the morning, will pop on here. And that's how we pretty much, anytime a stock just drops news, that's how we know, because it will drop news and then institutions have bots that buy stocks instantly as soon as the news is dropped. They have filters that filter all the financial sites. So as soon as the stock name comes up, institutions will buy it, so quickly you can't even catch it. But that increase in relative volume, because all of a sudden there's a big buy and a big jump in the stock, will put it on scanner here. So we don't really have to go through, Benzinga and other websites to subscribe for alerts. Once we put in those filters, the scanner will let us know. And that's a very useful piece of information, because sometimes traders find out about the news, but normally it's too late, because again, like I said, institutions buy the same second. So if you don't ride that move within the next 2 minutes, then afterwards it's sort of late. So the scanners are very useful like that. And this is a Thinkorswim trading platform. It's free in the US, and it's something that we pretty much tell all of our students to use. It looks a little advanced and overwhelming in the beginning, but once you learn how to trade, you will realize that all the tools that are here are very useful, and not only useful, but you really need them to trade. And then for students from abroad, and we have a great amount of students from abroad, normally, we tell them to just use Interactive Brokers, because they're a broker in most countries. And then TradingView is great for charting. I actually use TradingView for Fibonacci. Thinkorswim has Fibonacci as well. I just like the capability to screenshot charts in TradingView. Okay, so the first stock here is CYAD. The high of the day is $5. So obviously, a big psychological level, but also keep putting it on top. But also, the high of the day on the stock. So it's a clear area for short sellers to have a stop. So break above 5 is obviously short squeeze potential, and we're going to set an alert for that. Outside of that, we see this is the EMA 20 line. It had one very nice bounce there, so it might be setting up a new bounce now. That could be a good reversal trade. Just note a little bit of a difference from the previous one. This EMA 20 line is ascending, so when we had the first bounce to VWAP, you have 5% move. Now it's probably a little less. Now you have 3.5. So it might be a more difficult trade, and might make sense to just wait for VWAP break. Another sort of clear area to me about where short sellers might squeeze is a break of 4. It's not going to be as big of a squeeze. Oh, it's not 4. What is this? 4.6. Break above 4.6. It's probably not going to be as big of a squeeze as this, but we see that it had very big resistance there. Once it went above it, it had a squeeze. Once it was able to, break this flag again, had a bigger squeeze. And then once it went below it, this is a very bad sell-off candle. So it seems like that's sort of an area where they could squeeze, and we're seeing it now. So let's just see what that's a nice candle. It looks like VWAP is the one. It looks like VWAP's a little more. But I would still, it's testing 60 now. So if we miss the breakout, that's another thing. That's another reason why I like trading breakouts. If you miss the specific moment when the stock breaks, very frequently the stock will go back down and test that level as support. So you can trade that bounce on that level. And, it normally happens within that minute. So it's important to just keep watching it. Another thing that I frequently tell our traders is, if you miss an entry, sometimes what beginners will do is they will get mad at the stock and be like, well, I missed this one, now I have to find another one. And they will go back to their scanner trying to find something else. When in reality, when a stock is hot, this is what we want. We want stocks with a lot of momentum. We want the obvious stock of the day. We want it to be hot. So when you find it, you don't look away. You just wait for the next setup. When a stock is hot and it's running, it's going to make multiple setups that day. It's not going to just have one. And if it is very aggressive and it moves very high up, then everyone else is going to be looking at it. It's going to be a lot easier trade than something else where you're not sure if there's momentum or not, because every trader is trading the obvious stock of the day. So, and a prime example of that is trading breakouts. So see, like it broke above 60 here, and maybe we missed it. And then you see, like it very frequently will come back down to test that breakout level as support, and you can catch the exact same trade. But so so never look away when a stock is obvious. When it's a trade of the day, you stick with it. It's gonna make multiple setups, and in reality, even if you enter this stock here in the first VWAP breakout, you run out of shares. You take partial profit. It goes down, it shows weakness, so you sell. So you never end up holding for the whole move anyway. You will have to find multiple entries regardless. So whether it's your first entry and your friend trader, it's his third entry in the same stock, doesn't matter. It really doesn't matter. So get out of that mindset that you have to catch the move from the absolute bottom to the absolute top. I don't like this one. It's too cheap. This is BIOL. It's too cheap for me. It's trading in the 50 cents range. I have traded the stock in the past when it used to be more expensive. So I know it's a big mover. I just don't like to trade this price range. But this would be sort of the key levels I would be looking at. It's also below all indicators now, so not interesting. But, if I were to trade this, and I'm not going to trade this, but if I were to trade it, I would trade a break above 48. That's a nice move to VWAP. Then break above VWAP could be an add or a new trade for a move towards high of day. TOMZ, we traded this guy yesterday. It looks like it had quite the gap overnight. And now I'm going to have people in the chat room say, see, why don't we never hold these overnight? Look at this. We could have doubled our money. Yeah, this one time you could have doubled your money. The majority of the time you can wake up being 50% down on your position. So, these are very risky. And you guys see, sometimes we'll see a line on the charts that are literally from the last time we traded it 6 months ago. And they would be in the same level where it's at now, and it's already gapped up. So some people are waiting, 6 months to break even on these things, and that's if they're lucky. Some will never get their money back because the stock will never go back up to the highs it had, or will get, delisted. So they're extremely risky, and holding them overnight is just not, the risk reward for me is not big enough. It's sort of, very gambling. And especially if they have an active registration for a secondary offering. If they don't, and if you do your research, then maybe you can say, okay, I'm going to leave a portion of my profit, not even a pool position. Maybe I'll put in a portion of my profit and keep it overnight. But if they have an active registration, I won't even do that because it's just not worth it. They drop an offering, you wake up and you're down 80%. It's just not. You work so hard as a trader to make your money. You don't need to give it back while you're sleeping for no apparent reason because you really wanted to you really wanted to try and make money on something that's super risky. And it's not like we're risk averse, right? As day traders, we do trade. This is high risk. It's one of the riskiest ways to make money in the market, right? We trade very short moves on bad companies that constantly, sort of manipulate their stock price with their news, and have a very low float, so they can have very aggressive moves both ways, etc. So it's not like we're risk averse, but there's risk that makes sense because compared to the reward, and then there's risk that doesn't make sense. I don't ever take 50-50 trades. If I want a 50-50 shot, I'll go to a casino. The market's not a casino. But if you treat it like one, it will be just like casino and take all your money. Okay. HRTX, I actually like this chart a lot. We are going to check float on this. I'm actually going to grab my phone real quick and check it in the chat room. We have our little bot that quickly checks the float for us most of the time. Sometimes if it can't find the data on FinViz, they'll just, 101 million. I had a feeling it was a larger float than what we normally trade. It's just that's the way it looked. It obviously shows it can move, so it's not interesting. I just want to see 100 million float. I'm less, excited, but I would trade a VWAP bounce on this. This level of 935 seems to be a key level, and it's currently VWAP as well. So I would trade that. Note it's very early in the day for it. Currently, it has a 30-cent spread. You can trade a 30-cent spread on a stock that you're trying to catch a 15-cent move. VWAP to high of day is 15 cents. It has a resistance before that on 43, which is 8 cents. So when you have a 30-cent spread, you just can't trade that. The spread is larger than your gain potential. So we have to wait for it to pick up volume and for the spread to close out. But once it does, I like the chart. This one, nothing to see here currently, but plenty of room to high of day. So if it breaks above VWAP, it could be interesting. So I'm going to set an alert for break above VWAP. This is PTPI. We've been trading this one a lot this week. Then BORR. This one we used to trade a lot in the past. It used to pop up on Scanner constantly. It's a penny stock. It's below 1 cent, but it's right below it. And those are normally fun trades because they will try to get to that. It's below $1, not 1 cent. It will try to get that to that $1 mark. It's normally a fun trade. Again, it's very low on volume now, so I wouldn't even bother analyzing it too much. If the volume picks up, then we can worry about it. Pixie also close enough to $1 to might want to try to test it. That could be a fun trade. Volume too low for a trade now. Riot moving. If Riot's moving, that probably means Bitcoin's moving. But let's see what Mara's doing. Yeah, Mara's moving up too. So Riot and Mara are fun to trade at the same time. We've covered those in some of the morning lessons. At this point, there's like over 50 streams on this channel. So if you're a beginner struggling with support and resistance, or just getting some real life trading experience outside of your theoretical education, go to the playlist. If you want our playlist, this is called Daily Market Updates. Just play the playlist, over the next few weeks when you have the time. Watch the episodes. They're all short. They're like 15 minutes each, so you can easily break them up when you're free, and it'll help you a lot. Okay, that's it. I'm going to close the stream here. Have a great day. Happy trading. Love you the most, and I will see you in the chat room.